This is not breaking news. This is not a scandal. This is not about one person. But this is something much deeper. It's the slow, quiet unraveling of the global financial system. A failure unseen by most, but one that could change everything. And we are watching it happen right now in real time. This isn't an isolated moment. It's a systemic shift, a decision that will ripple across economies, shifting power, eroding stability, but no one is talking about it. This is the moment when the most dangerous kind of risk becomes visible, when the very foundation of a financial order you thought was secure is suddenly exposed as fragile. The truth is, the world's largest creditor has begun to pull out. And the implications, they are monumental. But you're not hearing about it in the mainstream, are you? It's happening in slow motion, quietly, deliberately, in a way that makes most people miss it. But not you, because today, we're going to see exactly what happens when the system starts to break down piece by piece. And you will not want to miss what's coming next. But first, let's look at what's really controlling the system today. So, what's really driving the system now? It's not the headlines. It's not the politicians. It's not even the so-called financial experts on TV. No, the true power is something deeper, something that's been quietly steering the ship for decades. The bond market. Think about this. Debt, sovereign debt, it's the bedrock, the silent engine that powers everything. And right now, that engine is beginning to stall. For years, the U.S. has relied on one thing to maintain its dominance: China's purchase of U.S. Treasury bonds. They've been the anchor, buying up debt that allowed America to fund its enormous deficits. It was a financial symbiosis. China got access to U.S. markets, and the U.S. got cheap credit to fuel its economy. But that's changing fast. The bond market, once dominated by China's endless appetite, is now hemorrhaging. With China pulling out, who will step in to fill that massive gap? The world is holding its breath, because without a buyer, prices will crash and interest rates will skyrocket. It's basic economics, yet it's happening behind the scenes, unnoticed by most. Now, let's take a look at the silent shift that is already in motion. The most dangerous changes are the ones you don't notice at first. They don't arrive with a loud bang or a sudden crash. They creep in slowly until one day you wake up and realize the world has shifted. That's exactly what we're seeing now. For years, China and the U.S. maintained a delicate balance, an economic dance of mutual benefit. China bought U.S. debt. America sent over its trade deficit dollars. But that system, that relationship, has been quietly eroding for a long time. It didn't happen overnight. It wasn't a headline-grabbing crisis. But the erosion of trust in U.S. Treasuries, the very foundation of the global financial system, is something that has been building for years. The signs were there, but they were ignored, dismissed, or downplayed. And now, the dam is breaking. China has been quietly pulling back from U.S. debt for months. The moment they made their move to dump hundreds of billions in bonds, that was the point of no return. And this wasn't an accidental decision. It wasn't a sudden panic. It was a calculated choice by Beijing. This slow burn, it's the most dangerous thing of all. Because now the global system, once seemingly built on stability, is wobbling, the illusion is cracking, and the implications are terrifying. But let's focus now on something even more alarming: a concrete shock from the data. Here's the hard truth. It's not just about the numbers anymore. It's about what those numbers tell us. China's sell-off of U.S. Treasury bonds wasn't just a routine decision to rebalance a portfolio. No, this was something much more serious. They didn't just move a little bit of money. They liquidated nearly half of their holdings in U.S. debt. Over $600 billion gone. That's not just a blip on the radar. It's a massive shift. And here's the kicker. It wasn't done in a healthy market. The U.S. bond market, it was in a historic drawdown. Interest rates were volatile, and prices were depressed. Anyone selling bonds in this environment was doing so at a asterisk, realized loss, asterisk, That's something you only do if you're in crisis mode, if you need cash right now, or if you're making a strategic decision that the asset is no longer worth holding. But here's the thing. China isn't in crisis. They're flush with cash. So why then would they sell at a loss? The answer? It's not about the money they're losing today. It's about what they're gaining tomorrow. They've made a decision. U.S. Treasury bonds are no longer a store of value. They're a liability, a risk, and they're getting out fast. So fast, in fact, that the speed of their sell-off is shaking the market. But why would they risk the instability? Why this urgency? It's all about survival. Survival in a world where financial leverage has become a weapon, and it's only going to get more intense. Now, let's peel back the layers and look at the hidden mechanism behind all of this. Because what's really happening here isn't just about numbers on a spreadsheet. It's about power, control. And what happens when that power starts slipping through your fingers? China isn't just selling bonds, they're flipping the script on the entire system. For 2 decades, China was the largest buyer of U.S. debt. They kept the engine running by recycling their trade surplus, fueling the U.S. deficit while maintaining their own economic growth. But here's the thing now. China's selling, they're getting out, and the world is scrambling to pick up the pieces. So who's stepping in to buy this debt? Who's taking on the burden of these U.S. treasuries now? Here's where it gets interesting. It's the allies. The UK and Belgium, to be exact. And here's the kicker. They're not buying U.S. debt with profits. They're not buying with savings. No, they're buying with borrowed money. They're taking on massive amounts of debt themselves just to keep the U.S. bond market afloat. Why? Because the consequences of letting the bond market collapse are too dire. If the U.S. bond market fails, it's not just the U.S. that falls. It's the global financial system. And the allies know it. So Washington has called in its favors. The UK and Belgium are stepping in, buying U.S. debt to prevent the collapse. They're not doing it because they want to. They're doing it because they have no choice. But this is where the fragility of the system starts to show. Because the allies aren't financially equipped to sustain this. They're already running their own deficits. They're already struggling with their own economic challenges. And now they're being forced to prop up the U.S. system at the expense of their own stability. The question is, how long can they keep this up? And then everything starts to unravel faster than anyone expected. We've seen the numbers. We've seen the shift. But now it's starting to hit harder. The consequences are no longer theoretical. They're real, and they're happening in front of us. China's mass liquidation of U.S. debt isn't just shaking the markets, it's creating a asterisk, asterisk domino effect, asterisk, asterisk. The allies, once eager to support U.S. debt, are beginning to feel the strain. First, it's the UK and Belgium absorbing the blow. But now there's a tipping point. These countries are already stretched thin. Their economies aren't built to handle this. The cracks are starting to show. And here's the next shockwave. What happens if the UK or Belgium can't buy the debt anymore? What if they sell instead, forced to liquidate their holdings to shore up their own financial systems? We're talking about a asterisk, asterisk fire sale, asterisk, asterisk, a flood of debt hitting the market all at once, triggering an economic asterisk, asterisk explosion, asterisk, asterisk. Prices would crash. Interest rates would skyrocket. Mortgage rates would explode. Banks would buckle. The debt would become unmanageable, and the consequences would ripple across the globe. The worst part? No one can predict how soon this could happen. It could be days, weeks, or months. But when it does, the financial system won't know what hit it, and we're on the edge. This isn't just about numbers or markets or politics. This is about asterisk, asterisk U, asterisk, asterisk, because when the financial system starts to fail, it doesn't stay in the abstract. It doesn't stay behind screens, hidden in data. It comes for you. When the markets crash, when interest rates spike, it's your mortgage that gets more expensive. It's your savings that get eroded by inflation. It's your job that might be on the line as companies scramble to keep afloat in a collapsing economy. You feel it in the price of gas, in your grocery bill, in the rising costs of everyday life. This is the human cost of systemic failure. It's not just about the rich or the elites. It's not just about the government. It's about asterisk, asterisk, everyday people, asterisk, asterisk. And while the global elites, politicians, financiers, policymakers can work to protect their own interests, the rest of us are left holding the bag. We're the ones who pay the price when the system breaks down. This is where it becomes personal. This is where the disconnect between the financial world and the real world where you live starts to have deadly consequences. And if this failure continues, the price we pay won't just be in dollars and cents. It will be in livelihoods, in futures, in the very fabric of society itself. So ask yourself, how far are we from that breaking point? How much longer until it reaches asterisk, asterisk, U, asterisk, asterisk? This isn't just a local problem anymore. It's a global storm. As China dumps U.S. debt, the tremors are already being felt around the world. What happens in the U.S. doesn't stay in the U.S. Not when the dollar is the global reserve currency, not when the U.S. bond market is the cornerstone of global finance. China's decision to sell off their massive bond holdings is like pulling a thread in a global tapestry. Slowly at first, but soon enough, everything begins to unravel. The UK, Belgium, Japan, these countries are caught in the crossfire. They're being forced to absorb the fallout from China's sell-off, risking their own economic stability just to keep the U.S. bond market from collapsing. But this is no longer just a problem for the West. This is a problem for asterisk, asterisk, everyone, asterisk, asterisk. The global economy is a delicate balance. And when that balance is disrupted, the ripple effects don't just damage the core, they spread outwards, reaching every corner of the planet. Emerging markets, vulnerable economies, they feel the strain first. Currency crises, inflation spikes, economic slowdowns, all of it begins here with the break between the U.S. and China. And when this fight over debt reaches a fever pitch, no one will escape the fallout. So where does this leave us? So where does this all lead? We've seen the cracks, the system is breaking down, but what happens next? There are three possible paths ahead, and none of them are easy. Asterisk, asterisk, first, asterisk, asterisk, adjustment. This is the path where the system finds a way to stabilize. Maybe China's sell-off slows, the allies step back in to help, and the global financial system recalibrates. But make no mistake, even this option comes with massive consequences. Interest rates might rise, inflation could soar, and countries may start pulling back from global trade to protect their own economies. It wouldn't be a smooth adjustment, it would be painful. But it's a possible future if the right moves are made. Second, erosion. The world begins to fall apart piece by piece. The U.S. bond market can't find buyers, inflation accelerates, and debt becomes unsustainable. Countries may start to abandon the dollar as the global reserve currency. The trust in U.S. Treasuries, once considered the safest investment, begins to erode, and with it, the foundations of the global financial system. This path leads to instability, to an erosion of power and influence that no one saw coming. Asterisk, asterisk, third, asterisk, asterisk, rupture, a full-scale collapse. The system fails in ways we can't predict. U.S. debt defaults, global trade crashes, and the global financial order breaks down completely. This would lead to a new world order, but not one anyone wants to live in. It would be chaotic, dangerous, and unpredictable, and the effects would be felt across every corner of the world. This is the worst-case scenario, but it's also the one that's getting harder and harder to avoid. Which of these paths will we take? The truth is, no one knows. But the choices being made today are pushing us toward one of them, and it's not going to be easy. We are standing at a precipice, and we don't know what happens next. Will the system adjust? Will it erode slowly, piece by piece, until there's nothing left? Or will it rupture entirely, taking the global economy down with it? One thing is certain, the ground beneath us is shifting. The financial order we've relied on for decades is beginning to crack. And if we don't start paying attention, if we don't start preparing for what's coming, we might find ourselves swallowed up by what comes next. You need to ask yourself, asterisk, asterisk, how will you prepare? Asterisk, asterisk, because this is no longer just about watching from the sidelines. This is about your future, your wealth, your security. And in a world where the global financial system is breaking apart, the decisions you make today will determine how you weather the storm. The countdown has already begun, and the next move is yours.